Hey everybody, Brian here. Today's Monday. It's the 3rd of March, 2014. Let's look at this market. We did finish with a small loss, but we can see on the daily time frame, it didn't do anything to damage this market except when we get to the shorter term time frames. Looking at a 10-minute time frame, you can see we are below a 5-day moving average, and that 5-day moving average has a declining slope to it. So unless we can get back above 185.50, we have to look at this market very cautiously here. That's going to be kind of the line in the sand for me, that I'm going to say we need to be very defensive unless we get back above and hold above there for now. We do have a lower low, and we have what looks like a lower high right now, and a declining 5-day moving average says we've seen a fantastic rally in the S&P 500. Now we've broken a trend line. We're below the 5-day moving average, and we're not quite broken, but we are in a very cautious area here. We have reason to be much more cautious now that we are below that declining 5-day moving average. We turned bullish back over in here, and now we're turning neutral. If we break below and hold below 183.80, then I think we become bearish over the intermediate term. But for right now, the longer term trend is still intact, but it's giving us reasons just to be cautious. The levels that we had outlined as potential pullback areas still are in existence near the 50-day moving averages, basically for these markets. For the NASDAQ, we were down 70 cents, and we can see here. I'm sorry for going back and forth, but here on the daily time frame, we came down and tested the breakout area, found a little bit of support there for now, and as we got a bounce. But we're looking at the 30-minute time frame, we can see we broke some support in here, and that this little band of support from last week between 89.75 to 90, let's even say 90 and a dime, has acted as resistance so far. And with the market below declining 5-day moving average, we have to look at this very cautiously. If we continue to drop from here, then I think the 50-day moving average comes into play for the NASDAQ as well. And I would say for tomorrow, looking back below this 89.30 level, that could be a place where day traders want to get short, as we are below a declining 5-day moving average. We closed at the VWAP, above the VWAP, but breaking below this level might lead to a little bit further weakness tomorrow for aggressive day traders. The Russell 2000, looking at the 30-minute time frame, again, we broke this uptrend on Friday, and today we saw that we continued lower, and we broke a lower low here, and we have what's looking like a lower high. So now the key to this market is going to be the 5-day moving average as well. And unless we can get back above and hold above 117.5, we have to remain very cautious here over the intermediate term. We do stand the chance of a deeper pullback, and a deeper pullback in this case might lead to a retracement such as a 38.2% retracement down towards that 114 and a quarter level. Right in here, this is our potential band of support, and that's also approximately where we see that 50-day moving average, which is rising. So, it's not a huge drop from here if we were to get there, but there are obviously some opportunities for shorter-term trades to take advantage of that. The Russell 2000, the semiconductors, we still remain above the important level of support at $43. However, this is starting to look like that it's possibly some distribution after the bigger rally, and breaking down below and holding below for more than a half hour below this 43 level, that is, would indicate to me that it's very likely we will continue to see a little bit deeper sell-off. And in this case, we can do the same type of Fibonacci retracements. We can do it on the daily chart here and see that from this recent rally, that would get us down to about 42 and 35 cents. That would be approximately where that 50-day moving average comes up to meet the market as well. The financials still stuck within this band in here, that this prior band of support and the band of resistance up in here. This has really been our range over the last 2 weeks. The 50-day moving average kind of halfway in between there, and price action halfway in between there. We have to look at it though and say the market tried to break out on Friday. It failed. It came back into this range. Now if it breaks the lower end of the range, and I'd say again holds below it for more than a half hour, so below 21.30, then I think that the financials have the chance of a little bit deeper drop, perhaps down towards $21 a share. Apple was up $1.52 today, and it is trying to stabilize here at the 5-day moving average, which has begun to flatten out. So intermediate term, we're turning more neutral. I think that this is going to be really the band of resistance that has to be overcome for something that could lead to a bigger move higher. So we're looking at a 30-minute time frame with that 5-day moving average being the orange moving average. Back above this 530.31 area might get it going again, but it's just a little too early to have any confidence in taking any long side trades. I think that right now, as it stabilizes, the opportunities are going to be found on the on the 1 day, that is a daily time frame. I'm sorry, not the daily time frame, but 1 day with 1 minute candles here, and for day trades only. So we need to kind of recognize the environment that we're in, which is that we've had a great rally. Don't allow that to have you complacent and think that everything's going to come back. We need to look at this market and say the market has to prove itself now before we can get aggressive on the long side. Don't think that the things that you bought last week under different circumstances where we had a bullish trend over the intermediate term are going to continue to work the same way that they did. Defense is always job number one, and now we have a heightened sense of uncertainty in this market, and that means to me that you have to go a little bit slower. We've had some great moves over the last couple weeks. We'll look for some opportunities here, long and short, but emphasis is always on risk management, and with this kind of indecisive environment we're in, it becomes more important to emphasize that.